Alrighty, welcome to the Taxpayers Help Center and LITC. Today we are going to be doing another Zoom presentation. And today's topic is going to be on your home office and the deductions that you can receive with working from home. Now, before we get started, I want to go ahead and share with you guys who we are as the Taxpayers Help Center and the LITC. So the Taxpayers Help Center is a nonprofit organization located here in Northridge, California. We operate 2 tax clinics. One, in our low-income taxpayer clinic, we help taxpayers resolve their tax disputes with the IRS. So that's going to be the first picture you see on our slide. And then with our second clinic, it's the Volunteer Income Tax Assistance, also known as the VITA clinic, where we help prepare income taxes for free. Masu Shatoni, he's a CPA. He's the director for both clinics. And then my name is Amiel Duncan, and I am one of the directors for the LITC. Now, individuals and businesses can support us financially by donating funds to help us expand the reach of our services. They can also volunteer their time or expertise or spread awareness about our services. Also, we help taxpayers both locally and beyond. We are an IRS authorized certifying acceptance agents, also known as a CAA, for the individual taxpayer identification number, the ITIN applications. So you can always call us today or whenever to set up an appointment to apply for an ITIN number if needed. And then to stay connected with us, we once again are located here in Northridge, California at 9029 Reseda Boulevard, Suite 209. You can also reach us by phone at 818-366-0111. We also have a website, which is listed at www.taxpayershelpcenter.com. And then we also have an email that you could email us any questions or queries at info@taxpayershelpcenter.com. And lastly, if you feel that today's presentation was beneficial towards you and could be helpful for someone you know or love, you can always send them to our Facebook account, which is Taxpayers Help Center, Inc., a nonprofit tax organization where today's presentation will be uploaded. And then we do have past presentations that you guys can check out. And lastly, on our Facebook page, if you stay up to date with it and stay connected with us through Facebook, you will be notified of future educational events that we will be hosting. So without further ado, let's go ahead and jump right into today's presentation. So today's title for the presentation is going to be Your Home, Your Office, How to Claim the Home Office Deduction. So the home office deduction allows eligible taxpayers who use part of their home for business purposes to deduct certain expenses on their taxes. To qualify, the space must be used regularly and exclusively for business. There are 2 methods for calculating the deduction, which is the simplified method and actual expense method. For self-employed individuals, the home office deduction can significantly reduce taxable income, making it an essential tax saving strategy. Since self-employed taxpayers cover all their own business expenses, this deduction allows them to claim a portion of their housing costs, such as rent, utilities, and maintenance, directly against their business income. Our goal today is to help you make sense of the home office deduction and maximizing your tax savings. Now, understanding the basics. So deducting a portion of home expenses for business use allows eligible taxpayers to claim a percentage of costs like rent, utilities, mortgage interest, and maintenance that directly relate to the part of their home used for conducting business. This helps reduce taxable income and save on taxes. From 2018 to 2025, under the Tax Cuts and Jobs Act, the home office deduction applies only to self-employed taxpayers. Employees who work from home cannot claim this deduction during this period, even if they meet all requirements. This limitation underscores the importance of their deduction for freelancers, contractors, and small business owners who use part of their home for business purposes. Continuing on, the home office deduction for self-employed employees is claimable on Schedule C, line 30 of your tax return. This is where you report the portion of your home expenses used for business purposes, either through the simplified method or the actual expense method. Properly claiming this deduction helps reduce your taxable income, and once again, it will increase your tax savings. Now, eligibility requirements for the home office deduction. We have exclusive and regular use, which is when the space must be used exclusively for business and not for personal use, and on a regular basis for business activities. Principal place of business is when the home office must be the primary location where business is conducted or a space used to meet with clients or customers regularly. And then some examples of the types of eligible spaces include a decorated room or office within your home, a separate structure on your property like a studio, garage, or shed used for business, and then specific areas such as a basement, attic, or converted space provided they meet the exclusive and regular use requirement. Now, moving on to the 2 types of methods to calculate your deductions. Taxpayers have the flexibility to switch between the simplified method and the actual expenses method each tax year. This allows you to choose the method that offers the most tax savings based on your current situation. If your home office expenses fluctuate or your business needs change, you can opt for the method that benefits you the most annually. So the first method that I have mentioned is the simplified method. This allows taxpayers to deduct $5 per square foot of their home used for business up to a maximum of 300 square feet. This means the maximum deduction available under this method is $1,500. It's a straightforward option that does not require tracking actual expenses, but it is limited in the amount that you can deduct. This method is ideal for those who have a smaller home office or who prefer a simpler calculation process. And then the second method is the actual expenses method. So this allows taxpayers to deduct a percentage of their total home expenses based on the portion of home used for business. The percentage is typically calculated by dividing the square footage of the home office by the total square footage of the home. So eligible expenses include your mortgage, interest, or rent, utilities such as electricity and water, property taxes, homeowners insurance, repairs and maintenance, and then lastly, depreciation for homeowners specifically. So this method can lead to a larger deduction for those with higher home expenses or a larger office, but it does require detailed record keeping. So that is something that is important to note. Now, when it comes to choosing your deduction method, there are some things you want to keep in mind. So the first one's going to be complexity. So for the simplified method, it's easier and quicker to calculate. It requires minimal record keeping, and it's ideal for those who prefer something that's straightforward. The actual expenses method is more complex. It does require tracking and documenting all relevant home expenses, and this is suitable for those comfortable with bookkeeping. The next thing you want to keep in mind is potential deduction amount. So once again, the simplified method, you can only get a maximum deduction of $1,500, whereas the actual expenses method may provide a larger deduction, especially if you have more significant home expenses. The next two things that are key factors you want to keep in mind when choosing your deduction method is space utilization and your tax situation. So for space utilization, if your home office takes up a larger portion of your home, the actual expenses method might yield greater savings. And then for your tax situation, it's important to consider your overall tax situation, including your income, other deductions, and potential tax liabilities. So deciding between the simplified method and the actual expenses method for the home office deduction, it's important to consider these four factors: space utilization, your tax situation, complexity, and potential deduction amount. However, it's completely a personal preference, so it's very important that you evaluate your circumstances each year to determine which method maximizes your tax benefits while minimizing complexity. So we're going to dive a little deeper into the simplified method and how it works. So eligibility, you want to ensure you qualify by using part of your home exclusively and regularly for business purposes. Area of calculation, so you're going to measure the square footage of your home office space. Deduction calculation, so for this part, you're going to multiply the area and square footage by $5. So the formula would be deduction equals area in square feet times 5. Once again, there is a deduction cap. The maximum deduction you can claim is $1,500, which applies if your home office is 300 square feet or smaller. And then filing to report the deduction on Schedule C, line 30 of your tax return. So once again, this is a very straightforward method. It requires little to none detailed record keeping of your home expenses. Therefore, this makes it an attractive option for many self-employed individuals and small business owners. Now, moving on to the actual expenses method and how this works. So for eligibility, you want to confirm that, once again, you are using part of your home exclusively and regularly for business. You're going to calculate your business percentage. So for this, you need to determine the total square footage of your home. And then you also have to measure the square footage of your home office. And then to calculate this, you're going to use this equation right over here, which is the business use percentage equals home office area in square feet divided by the total square footage of your home times 100. So calculating your total expenses, sum up all of your eligible home expenses for the tax year, and then determine the deduction amount by multiplying your total home expenses by the business use percentage. This equation is going to be deduction equals total home expenses times business use percentage divided by 100. For filing, you're going to report the deduction on Schedule C, line 30 of your tax return. And then in order to track actual expenses, you're going to document all eligible home-related expenses, including your mortgage interest or rent, utilities, homeowners insurance, property taxes, repairs and maintenance, and then lastly, depreciation if you own a home. Now, to put this a little bit more in perspective, I did give you guys some examples of how the simplified and actual expenses method would work. So for the first example, we have Jane, and she uses 200 square feet of her home for business. Her deduction is calculated as follows. So it would be 200 square feet times 5, which equals $1,000. Therefore, Jane can claim a home office deduction of $1,000 on her tax return. And for the actual expenses method, Jane's home office occupies 10% of her total home area. So this means that she can deduct 10% of her eligible home expenses for business purposes. So for instance, if Jane has a total home expense of $20,000 for the year, her home office deduction would be calculated as follows. So for the deduction, it would equal the total home expenses times business percentage. So once again, this will be $20,000 times 10%, and that would get you $2,000. Therefore, Jane can claim a home office deduction of $2,000 on her tax return. Now, there are limits on deductions. So for home office use, the home office must be used once again exclusively and regularly for business purposes. If the space is used for personal activities, the deduction may be limited or disallowed. Business income limitation. Deductions for home office expenses cannot exceed the income generated from the business use of the home. So if the home office expenses exceed business income, the excess can be carried forward to future years, but it cannot create a business loss. So for actual expenses method restrictions, while you can deduct a percentage of your actual expenses, certain expenses may have limitations or must be prorated. For instance, if you rent part of your home or if your mortgage interest exceeds a certain threshold, only the allowable portion based on business use can be deducted. And then for depreciation limits, if you claim depreciation on your home, it can reduce the basis of your home, impacting any future sale. Therefore, it's essential to consider the long-term implications of claiming this deduction. Changes in use. For this one, if your business circumstances change, you may need to adjust or discontinue your deductions accordingly. Now, moving on to allowable deduction calculation. So when your business income is less than your total expenses, you can only deduct an amount that does not exceed your net income from the business. Here's how to calculate the allowable deduction. So first, you're going to determine your gross business income, which is the total income generated from your business activities. Second, you're going to calculate your total business expenses, such as your home office deduction, operating costs, and any other additional expenses. Third, you're going to calculate your net business income, which is your gross business income, that total, minus the total business expenses. And then lastly, you're going to determine allowable home office deduction. So if your total business expenses exceed your business income, your home office deduction will be limited to your net business income. So if your home office expenses are higher than your net income, you can only deduct up to the amount of net income. And then an example for this would be if Jane's gross income is $3,000 and their total business expenses, including the home office, is $5,000. To calculate this, you would take the gross amount and subtract it from the business or the total business expenses. So that would be 3,000 minus 5,000, which would get you negative $2,000. So in this case, the net income is negative, indicating a loss. Since the business income is less than the total expenses, the allowable home office deduction is limited to $0 for this tax year. You cannot claim a deduction that exceeds your income, and thus you can carry forward any unused home office deductions to the future years when your income may be higher. Now, who can deduct? So for direct expenses, which are 100% deductible, these expenses are incurred specifically for the home office and are fully deductible. So that includes repairs and maintenance. So these costs are directly related to the home office space, such as fixing a leak or painting the office. And then for number 2, we have indirect expenses, which is proportional. These expenses are related to the entire home and must be prorated based on the business use percentage. So things to keep in mind, we have mortgage interest, the interest portion of your mortgage calculated based on the percentage of your home use for business. We also have insurance. So homeowners insurance premiums prorated for the business use area. Utilities, which are the expenses for services like electricity, gas, and water calculated based on the business use percentage of your home. And then lastly, we have property taxes, which are local and state property taxes allocated according to the proportion of the home used for business. Now, also something that's very important to keep in mind are travel deductions. So for principal place of business, if your home office qualifies as your principal place of business, you can deduct travel expenses incurred while traveling to other work locations. Deductible travel expenses include your mileage, so the cost of using your personal vehicle for business travel, calculated based on the standard mileage rate set by the IRS, or actual expenses. Next, we have transportation costs. So these are expenses for public transportation, such as the train or bus. Then we have lodging. So this is the cost for overnight accommodations while traveling for business purposes. Second to last is meals. So a portion of meals expenses incurred while traveling for business, generally 50% of the cost can be deducted, which is really nice. And then lastly is other travel expenses. So any necessary business related expenses such as parking fees and tolls can also be deducted. And then for documentation, it's crucial to keep detailed records of all travel expenses, including mileage logs, receipts, and notes on the purpose of each trip to substantiate your deductions. Now moving on to home office and home sales. So home office as part of residence. So if your home office is a designated part of your residence, you generally do not need to allocate a gain on the sale of your home to the sale of your home to the home office. This means that any profit from the sale is treated as a gain on the sale of the entire home, which may be excluded from taxable income under the home sale exclusion rules, which is up to $250,000 if you're a single filer or $500,000 for married couples filing jointly. So recapture of depreciation. If you claim depreciation on your home office, specifically under the actual expenses method, you are required to recapture that depreciation when you sell the home. This means that the amount of depreciation taken on the home office after May 6, 1997 will be subject to tax as ordinary income. So recapture amount, the amount of depreciation that must be recaptured is taxed at the maximum rate of 25%, which could affect your overall tax liability upon the sale of your home. And then some key notes or key takeaways that are very important would be one, to ensure that you keep detailed records of depreciation claims to calculate the recapture amount accurately when selling your home. And then lastly, it's also important to consult a tax professional for guidance on how these rules apply to your specific situation, especially if you have substantial depreciation or if you're considering selling your home in the near future. Now we're going to move on to tips for avoiding errors. So the first one is going to be not using the space exclusively for business. So to qualify for home office deduction, the space must be used exclusively and regularly for business. Using the area for both personal and business purposes could disqualify the deduction. Ensure the space is dedicated solely to your business activities. Second will be miscalculating expenses or business use percentage. So when using the actual expenses method, it's essential to accurately calculate the business use percentage of your home. Mistakes in measuring square footage or prorating expenses like utilities and insurance can lead to incorrect deductions. So you want to double check your figures to avoid over or under claiming. And then number three is going to be not keeping adequate records. So proper documentation is key for both methods. Failing to keep detailed records of expenses can result in disallowed deductions during an audit. Maintain organized records of your home office and all related expenses for at least 3 years. And with that, that concludes today's presentations on home office deductions. I hope this was extremely helpful for you. If it was, feel free to share this to a loved one or someone that you may know that needs help with their taxes. And once again, if you or anyone you know have questions, please feel free to contact us or get in touch with us. You could call us at 818-366-0111, shoot us an email at info@taxpayershelpcenter.com, or you could visit us in office at 9029 Reseda Boulevard, Suite 209 in Northridge, California. Our Facebook page, Taxpayers Help Center, Inc., a nonprofit tax organization, where we have past presentations on earning tax credits and everything else under the sun that regards your taxes. And we will also have more presentations on the way. So with that, I thank you all so much for your patience and your time, and I will see you guys in the next educational video.